The market has been on a wild ride lately. One moment, stocks are rallying. The next, they're pulling back because of some economic data or political development. If you've been watching the markets, you've probably noticed that volatility is creeping back in, and investors are trying to make sense of it all. But here's the thing, this is exactly the kind of environment that creates opportunities. When stocks swing unpredictably, smart investors look beyond the noise and focus on what really matters: fundamentals, valuations, and long-term strategy. So today, let's break down some of the biggest market moves, economic signals, and a few stocks that are looking attractive right now. First off, let's talk about inflation and interest rates because, let's be honest, that's what's really driving the market right now. The latest CPI report showed inflation is still hanging around 2.9%, which means the Federal Reserve probably won't be rushing to cut interest rates anytime soon. If you were hoping for rate cuts in March, you might need to adjust your expectations. Right now, it looks like the Fed will hold off until at least mid-2025 unless we see a bigger slowdown in economic growth. And speaking of growth, the job market is still surprisingly strong. Unemployment remains low and wages are ticking up, which is great for workers but makes it harder for inflation to cool down. That's why the Fed is being cautious. If they cut rates too soon, inflation could make a comeback. For investors, this means the market could stay choppy for the next few months as traders react to every new data release. But long-term, this is still a great time to be looking at undervalued stocks. Let's get into some individual stocks because there are some great opportunities out there, especially after recent pullbacks. Alphabet has been under pressure after earnings, mostly because of concerns about cloud growth and AI spending. But here's the reality. This company is still a dominant force in digital advertising, search, and AI. Google Cloud is expanding fast, and AI is going to play a massive role in its future revenue. The company is sitting on billions in free cash flow, has an incredibly wide moat, and even after the dip, it's trading at a discount to its fair value. For long-term investors, this is the kind of stock you buy on weakness and hold for years. Amazon has been bouncing around lately after giving cautious guidance for 2025. But if you look at the fundamentals, the story here is still incredibly strong. AWS, Amazon's cloud division, is still growing and is the backbone of the internet. E-commerce is stabilizing, and the company's push into AI-powered logistics is already improving margins. Long-term, Amazon is one of the most dominant businesses in the world. Anytime it pulls back, it's an opportunity for patient investors. AMD has been one of the biggest names in AI chips, but after its latest earnings report, the stock took a hit. The reason? Data center revenue didn't grow as fast as investors wanted. But here's the bigger picture. Demand for AI chips is only getting started. AMD is investing heavily in its AI product lineup, and as companies continue to integrate AI into their businesses, AMD's revenue will follow. Right now, the stock is trading at a discount to its long-term potential, making it an interesting buy for investors willing to hold through short-term volatility. Microsoft has been on fire this year, and for good reason. Its AI strategy is executing better than almost anyone expected. Azure, its cloud business, is growing rapidly. Microsoft's partnership with OpenAI has given it a massive head start in AI applications. And on top of that, its gaming division, especially with the Activision Blizzard acquisition, is expanding into one of the most profitable markets in tech. This is one of those rare stocks that balances growth, profitability, and stability. If you're looking for a blue-chip AI play, Microsoft is one of the best bets. So what's next for the market? Here's the bottom line. We're in an environment where earnings and interest rates are driving everything. Until the Fed signals a clear path to rate cuts, expect more volatility. Some sectors, like tech and AI, will continue to lead, while others, like traditional industrials, might struggle in the short term. But here's the key. Long-term investors should not be sitting on the sidelines. When high-quality companies trade at discounts, that's when you want to be buying. So with that in mind, let me know. What stocks are you watching right now? Drop a comment below and let's talk about it. And if you found this breakdown helpful, make sure to like, subscribe, and stay tuned for more market insights.